The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials trading up 44. NASDAQ is up 24. S&Ps are up 11. Gold contracts down $12 at $1,314 an ounce. We have silver off 13 cents, $18.93 an ounce. Platinum is off $7. 1,024. Light sweet crude going lower once again, down a quarter at $43.94 a barrel. Notes are down 8 ticks, 130.06. Bonds are off a full point, 164.28. King dollar's up 173, now 213.6. Oh, it's moving, man. Holy cow. At 95.53. The euro is down 23 at $1.12, and the yen is at 102 3/4. And we really get volatility out here, man.
When you know that screen's lighting up red and green everywhere, it seems like firing back and forth. There's some volatility.
There's some volatility
for sure.
And
it's a Christmas tree over there, man.
It is a Christmas tree. There's no doubt about it. And you know, we'll see. Bottom line, if these markets can hold. What you had out here yesterday, of course, is that they basically sold it off. You know, market stayed slightly positive, but having a hard time holding price, man.
Definitely.
Now, folks, let's go over to our man, Mr. Kevin Hinks, as we do each and every trading day. Kevin and Scott, TD Ameritrade Swim Lessons, has a great show right here, 12 to 1 Eastern Standard Time, every trading day. Now, folks, no matter where you are in the country, in the world, actually, but if you're in the country, you might be listening on your car radio, you can get us right on your cell phone. Go to TFNN.com, you hit Tiger TV, you're going to get great audio and video. And if you trade the option market, folks, it's a must. And this market here, defined risk is totally where it's at.
Just a little bit of volatility in the market.
Oh, it's a beautiful thing, man.
A little bit.
Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Hey, speculation. That's what we love in the market. That's how we make a living, right? Speculation.
There's no doubt. And you know it's amazing. So you got to check this out, Kevin, right? The Apple is saving the markets right now, okay?
Right.
Yesterday, folks, Apple saved the Dow Industrials. It saved the NASDAQ. Bottom line, it's saving it again. And it's between Apple and its suppliers. So you had Apple, you had Skyworks, and the AVGO. That saved the market. And you know it's wild, Kevin. I was thinking of you because I know how much you love Apple, and my take was Apple was going a lot lower. So every single time I'm listening to you and Scott, and you're saying, "Yeah, this is Apple, man. We're going up." And I'm saying to myself, "Oh my God!" But now it's saving the whole market, man.
Right. Well, you know, you have to understand, this type of time of the year.
Yes.
And where Apple is in their cycle, where they're coming out with a new phone. Remember, they get a new number coming up very soon, the iPhone 7. So it usually is extremely strong historically into this time. Now, what happens when the iPhone 7 comes out? They've been really peppering this market with news, right?
Yes.
The Apple Watch is doing better than they think. Now they're hearing sellouts in the iPhone 7. So Apple's got a lot of good news, right? All the charm offensive that was going the last few months by Tim Cook all seems to be working.
No doubt.
And I think it's tomorrow that the phone starts taking sales. I'm not sure of that, but so it's right here. Yeah, they really done it.
It's
for
here.
The 2 days prior to it to have, literally on cue.
And and this is where folks, understanding volatility in the marketplace, Apple's been moving the last 3 or 4 days, but Apple was dead in the water for a long period of time, so your premiums are very low inside that option market, which was so cool, man. Because I was watching you guys rolling, month by month, just rolling those things forward, and I'm saying to myself, what a trip this is, man, of course.
Right. And did you notice massive call and put volumes yesterday in Apple in terms of the Thinkorswim platform shows you the comparable volumes. And volatility was actually up on the upside, which is, you normally don't see, but there was massive call volume yesterday, and when Apple is blowing through strikes,
yes,
you got a lot of people with open interest who thought their options were going out worthless that are now in the money. So those all have to be rolled, right, and traded out of.
I mean, that's such a huge move.
It just causes an avalanche of order flow.
Yeah, you got to love it. So what are we talking about today?
Today we're going one step further. We're using this big data day that we got in the markets we're going to talk about vertical spreads and iron condors and keep working. Nice.
And folks, every trading day, right here, 12 to 1 Eastern Standard Time. It's an amazing show. Now, if you haven't test drove the Thinkorswim platform, great. It's always a great time to do it. Come over to our website at TFNN. You can hit the banner. You can bring up the exchange. They'll put paper money. You can trade with paper money. You can listen to us in the morning. Of course, you can listen to Kevin and Scott noontime, and you can really get a great understanding of how these options move, whether it's puts, calls, whether it's spreads, whether it's butterflies, all of the above. And, you know, what happens, which is just great, folks, when markets move this quick, you can learn a lot more about markets in a smaller period of time. Just because these numbers get hit a lot more, you know.
There's movement. There's action. Yeah.
There's action. It's a beautiful thing.
Action.
Yeah.
Totally.
Kevin, you have a great one and a safe one. Of course, we look forward to the show at noontime.
Always great talking to you guys. Have a good day, everybody.
Thanks, man. You stay right there, folks. Tommy and I are coming right back. Dow Industrials right now are up 54. The Nasdaq's up 31. S&Ps are up 12. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we have the Dow up 66 right now. Nasdaq's up 36. S&Ps are up 14. And guess what? It's Thursday, and that means natural gas, right?
It sure does. 10:30 inventory numbers. We'll take a look at the Nadex platform.
And if you haven't test drove the Nadex platform yet, great time to do it, folks. Come over to our website at TFNN. You're going to see the banner on the top of the side, and they've been hammering this thing all morning.
Yeah, so this is natural gas. We're looking at the October contract, and yeah, it's been quite a ride already. You're talking about 7 cents, which is a big move ahead of the inventory numbers at 10:30.
Right.
And this is only going back to about 4 in the morning that it was up there. So that's going to skew a little bit where this is probably going to fall within those spreads.
Right.
Right? That's, right away before we pull them up. If you're familiar enough, I was saying to myself, okay, maybe the middle of the spreads are probably going to be somewhere up here, right?
Yes.
And sure enough, when we just pull up the 11 a.m.s, it looks like the middle of the spread was even at 290? Yeah, 290. So when we were setting up those trades last week,
right,
it would be ideal with these setups just where if the market were sitting at 290.
Right.
That is where, for what we were doing, if you want to do both sides of the trades,
yes,
you could do 270 to 290 and 290 to 310,
right,
etc.
And so this is important to understand, folks. Even as Jay is saying, and the Tigers Den also, when you understand where the spread is set up, sometimes you just don't want to trade it.
Yeah, there's different risk-reward scenarios, right?
Because we're talking about the 11 o'clock one, too, by the way.
Yeah, I was just going to say.
I'm talking about the news.
Right. And those are the ones we like because it's the shortest. There's only 30 minutes remaining.
Right.
And I'm just jumping around. These get a lot bigger. You're going to 230. You are going to be paying more premium. But guess what? You can get in those if you're going to get right out of them at like 10:45 or 11 o'clock.
Right.
You can trade out of them as well. But going back to 11 o'clock. So it looks like, realistically, you could...
284.
Yeah, you could make...
You go down to the bottom of this. Yeah, I mean, if you think it's going to bounce, there you go.
You can get risk rewards in both directions. They're pretty good.
Yeah.
So there is the option. It's just not the same type of trade where you had so little at risk. And that's where you have so little at risk because there's no intrinsic value in either one when it's right at that floor and ceiling. You're just paying a little bit of premium on each side.
Yes.
Whereas when you have value on each side, you're going to have to pay for the value, and then you're going to have to pay for the premium. So this is a perfect case. Like, let's say market's at 284, right? You can get in at about 284 here.
Okay.
So per contract, if you were just buying this one for the upside,
yes,
you're risking about $47 for your 153. And then the same way, you could sell one, okay, on this contract, which is you're selling it closer to the ceiling, which is where, because ceiling's at 290, you're selling it at 284. And so your loss is 61. But what I was saying is that you have value in each one of these. So you have to put up 100 per contract, per each, per the two of them.
Okay.
Because realistically, you're buying the one where there's $43 of value, looking at the 10th and the 100th tick value, right? Because the floor is 280.
Okay.
You're getting in at 2843. So that's your $43. For these types of trades, you'd rather it's at 280. Do you see, because that's where your risk reward, and then you're going to be paying more premium like that. But that's what we're looking for. We're looking for trades where we're paying premium for our market because we think it's underpriced for the expected move.
Right.
So I mean, there's opportunities in the same way.
No,
this is.
There is. That's not as bad as I thought it was going to be. Actually.
No.
Because of the premium that's in there. Right.
Right.
Yeah. Right.
And they're going to offset each other. You just can't have the extreme amount of leverage, I think, is where the difference is.
Right.
That's where.
So let me pull up the UNG for a second and see what is cooking with this. So the UNG.
Back up.
The UNG, folks, is the ETF structure for natural gas. That's at 836, down 15 cents. Okay, so this...
And you can see that one opened down because there was so much of that movement overnight.
Right.
Yeah, we're below yesterday.
The real question is, boy, this is not talking to me, Tom.
Okay, wow.
That's the bottom line. There you go. So you're 829. Yeah, this looks like it wants to go a little bit lower. 829, you're at 835. So if I take up, and we're doing the October contract, right? I'll just bring up, I'm going to bring up November. I just want to see this.
Yeah, it's going to be similar, just to...
Yeah, that looks to me. I'm not going to trade this thing, but that almost looks to me like this thing does want to go lower. So we hit, yeah. Well, this is interesting. So 1 second, $3.05, $2.94. So
11 cents.
11 pennies. 2.98. That's 2.87. That's 5 cents from where we are. Interesting. Okay, we'll see where it shakes out. But that would be the, I'm not going to trade it, but that would be my consensus anyway.
Maybe going bearish.
Yeah.
Cool.
Yeah.
Why don't even, I'm just going to jump back to it because, at least just walking through. So if that is the case, right, you would probably be looking at basically just taking the, I'm just lining up, the bearish side of this trade. So you could just basically initiate.
You'd be risking 61 to make a $1.40. And that would be saying it can get down to 270. I'm saying 287. Oh no, this is a different contract. Okay, that's a different.
Just staying with that's bearish, and that is what you're paying is the difference between 284 and 290, the ceiling, because that's basically where you're going to lose money because you're going bearish. So anytime it's rising from 284 up, you're losing money up to 290, and anytime it goes down from 284 to 270, you're profiting.
Right. Yeah. Right. And as Jay says, what's going on, now this is what gets so cool, folks. We got 6 minutes before the 11 o'clock. And
6 minutes before 10:30 in the news.
Thank you. Yeah. Yes. And now they're pricing in, they have better pricing right now inside the binaries. And this is pretty cool that if you get this set up at the beginning and understand which way you want to go,
What do you mean, like, just
well,
like
I'm not
better,
sure. He's just saying that now they are pricing the binaries better. So that would say to me that the spreads are coming in somewhat.
Yeah. Yep. So we'll see what happens.
Our phone number is 877-927-6648. Market, you get the Dow up 59, Nasdaq's up 33, S&Ps are up 12.
And just seeing as we're jumping, we covered so much of it. These are some of the numbers that are going to be expected. Probably rose 63 billion cubic feet, Bloomberg used to say.
Okay.
So they're looking for for a supply gain, no matter what. How big will it be, and will that drop?
Yeah.
There you go.
Let's go take a look at the strength inside the Dow Industrials versus the weakness. The strength out here, look at Apple. Apple's holding it up.
Oh, yeah.
Apple's up 2.8%. Intel's up 1%. Goldman's up 0.8.
You know what's amusing? Just staying on Apple, because we got like 30 seconds till we'll go to break. I started watching the show Billions on Showtime, which I just got access to Showtime for a short period, so I started watching that, and it's about hedge fund investors, and one of the lines that stuck with me because it was last night that I was watching it, and this is from a while back. It's the season 1, but the guy's looking for ideas. And one guy goes, "I think I want to, I think there's value in Apple." He's like, "I think it's going up." The guy's like, "We charge 3% management, 30% profits, and you want me to tell all the investors that we're just going to buy some Apple stock?" But it's like, but look at what it's done in the last. But it was awesome, and it is a good show. I'm like 2-3 episodes in. That's all, and it's pretty good. It is,
cool, man.
Especially if you're around the market at all.
You stay right there, folks. Tommy and I are going to be coming back. We're going to have those natural gas numbers for you. Dow's up 69, Nasdaq's up 37, S&Ps are up 14. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We're trading at 286. We're at 280. What was that? 284.
Yeah, about 3 even. Yeah.
Yeah.
So we've gotten a pop, and we're seeing the news on the other side that stockpiles rose about 62 billion cubic feet. So I'm not sure what the median estimate was, which was the big one, but even the Bloomberg survey or Bloomberg users was pretty close to that. So there you go. The median estimate was 61 billion cubic feet. So pretty much dead on. But guess what? Not exactly what the market expected, obviously, as maybe the market expected more of a glut there, right? Because they seem to be saying the price is going up.
Yeah.
As in there's not enough. There's less than they thought. People are going to have to pay more for natural gas than maybe they anticipated with less supply than maybe they thought.
So what you have here, folks, when you're looking at this chart, at 6 o'clock this morning, it was traded at this price. It went down 4 pennies. Now it's back up 4 pennies. It's still down for the day, but bottom line is that you do have an upward thrust out here.
And just so we were looking at, too, just real quick, right? We were looking at the binaries, and some of the binaries at 11 a.m., they were just away from the market a little bit, but, you know, they were only away from the market if you wanted to go to the downside because it went down so far. But guess what? If you were playing to the positive side, there were plenty of options, almost as high as you could go because it was just trading at these levels.
Yes.
So that's where you got to download the demo and get used to everything, you know?
Right on the front page of TFNN, folks.
So we'll follow that. But you know what? Kudos to you for not having the conviction and not just making a trade because it just wasn't
it's just
strong enough. And
And if we go over to UNG, let's just see how this is shaking out. So UNG, it's filling the gap. That's all. Okay, this is interesting. This is going to be interesting to see how this shakes out. So UNG had gapped down, as you said, because the contract was already down. It closed yesterday at $8.51. It traded to a low of $8.33 today, and we just hit $8.50. So it's first. It's got.
And as we saw with oil yesterday, right?
Yeah.
It takes some time for these numbers to sort themselves out and to find the trend that they're going to stay with in terms of oil getting like $1 almost to the upside versus $1 to the downside.
Right.
Before we're even off the air.
No doubt.
Yeah.
Let's go over to the gold market. So the gold market, folks, is pretty intriguing out here this morning, and this is what it is. You have the gold contract down $10, $10.40. Now you have volume coming into the market here. We've done 135,000 contracts. You're coming into 234,000 as well as 183. Now that being said, watch this. If we go to the GDX, what you're going to see, okay, so the gold contract is the metal. The GDX is the equities, okay? This would be the large cap equities. This is the Van Eck Gold Miners ETF. Now, this is holding up really well, okay? Now, I wouldn't be buying this, okay? Because this to me is like really dangerous. And what it is this, is like when gold's down so much and this is holding up pretty good, it's going to be like, okay, number one, you very well could hold, and that would be the end of the down move in gold. Or you're just building heavier cause in order to break loose. Now, inside the GDX, if we go over to Barrick Gold, that's the largest weighting. What you're going to see in Barrick is that, that's coming into a high volume level, and it is coming in with lighter volume,
Yes.
So today's a big day in gold. That's the
big movement. Down $10, down $15.
Yeah, and
with the rate move, with the bond movement, I should say, and the Fed coming next week.
Yeah. And this is the deviant part about it, is that it's really surprising actually that the bonds are still going down, the dollar's still going up, because the numbers this morning weren't that great.
Okay. Yeah.
The retail numbers were down. I think what you have here is that the Bank of England did not move lower today. And it's like, okay, it's not that the market was expecting it, but what Kerry said is that, things are better than they thought with the Brexit deal happening. So if the Bank of England's not moving and Europe's not moving, guess what?
We're going up.
We're going up.
There you go.
That's how this thing shakes out, folks, because, it's very easy to go up a quarter point. And this is, I wrote this in the newsletter this morning. We talk a lot about the short-term rates, but none of us out here, unless you own a bank, get the short-term rates.
Right.
The short-term rates is a bank-to-bank rate that, no one gets 0.25% on money.
So to come back at that, though, nobody pays like the cost of good for, an item Walmart sells, right? But every time Walmart has to pay more, that's disseminated to the consumer that they're going to pay more.
That's right.
Because it's the cost of goods. And guess what? Banks, their cost of goods, what's the cost of money?
Right.
And that's where it stems from. So there's that element, too, before you talk about that. It should reverberate how long that takes and how it does. But it all stems from a beginning rate, and that's kind of the beginning rate.
Oh, no, it does. Well, the market itself, the 10-year, that's what the 10-year mortgages are based on.
Sure, right.
The 30-year, we all know what that is. Most of us have 30-year mortgages.
Sure.
But the market itself has basically, hit the bond market and say, okay, we're going up whether the Fed wants to go up or not.
Yeah, for sure.
And look at it, just as I'm talking to, the GDX went from down 15 cents down to, I got to watch this like a hawk here. Seriously. 25.60 to 25.98. Hey, we'll see this baby shakes out. The dollar, let's see, the dollar's up 108 ticks. That's still hanging out there. We had started to go inside the NDX to see what the strength was. So, as yesterday, it's pretty amazing. Skyworks, which is the big Apple supplier, that's up 5.4%. Let's look at that chart. Look at that.
Yeah.
Mimic. So, in 4 days, it's gone from $65.79. Look at that to $76.28.
It's like 20% almost.
Yeah. Apple, of course. Thank you. Apple is up 3%. AMAT is up 2.7. NVIDIA is up 2. Taken away from it, Alta Salon is down 1.8. INCY, which is Insight Corporation, is down 1.4. JD.com is down 1.2. Let's go look at Alta, because this was an equity that had a one-way trip. I know. Look at this. So that's gone from 278 to 232.
Good to be in the makeup business.
August 24th. Yeah. Oh,
cosmetics
I've been
in general.
I've been in these stores.
I have too.
These stores are huge, folks. Yeah. They're big box stores. Where do you see this chart? This was a one-way trip.
Yeah.
$82 in.
270.
Yeah, it's 270. This looks like it's on its way back to like 203. Pretty intense.
And I wonder how that all plays out, because they're definitely in huge malls, and we've seen how maybe mall traffic could be suffering, and that could reverberate pretty quickly to a company like that definitely relies on
traffic,
on mall traffic, and
right.
It seems like it lends itself even more to where it's more women, right? And I don't know what the stats are.
No, it's definitely.
But,
I've been in. It's definitely more women.
Oh, of course, yeah.
You know?
I mean, it's all cosmetics.
Guys, you should go in there. Oh, well, the shampoos and all that are very.
Sure. Okay.
Well, I don't know if they're expensive, but they're less expensive than
Finish that sentence.
Than buying in a salon.
In a boutique or something.
Yeah, in a salon.
Yeah,
you know
yeah. No, that makes sense.
You stay right
it's
there.
It's all more expensive than Amazon, though.
Yeah, exactly.
It is.
You stay right there, folks. Tommy and I come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 50. You get the Nasdaq up 33. S&Ps are up 11. Let's go and take a look at our favorite bank, Wells Fargo. Ooh, it's getting hit out here today. That's and so
more than us must have been talking about that yesterday.
Yeah. Well, you know what happened?
As people just begin to find out about, really, I think that. Go ahead. But
I agree.
It's that type of a deal where you hear about it, but then you don't hear about the details, but then you get more of the details, and then you hear about the executives get on the money, and then and it's the whole thing's like a perfect story to take off.
And the first day that I heard about it, right? Now, this is sad too, folks. Okay, is that the banks have gone through so many fines and everything. I said, oh, here they go again. Do you know what I mean? And I really didn't think a lot about it.
Yeah.
And that's insane.
We're desensitized. That's what you're talking about.
Yeah, and that's insane because you're talking about 2 million accounts that got hit, right?
Was that what it was?
Yeah, okay. 2 million accounts. Over 2 million accounts.
Okay, yeah. I think you're right. Right. Yeah.
And so what did happen yesterday when I was on the air, at the 3 o'clock hour, the federal prosecutors in New York and the federal prosecutors in L.A. have opened up a criminal probe.
Sure, yeah.
Different ballgame.
People in their office heard the same thing we heard and said, whoa.
Right, right. And you know...
So what was going on?
And I guess just as you just did, like, hold it, 2 million?
Yeah, I imagine. I mean, they're the people that, that everyone's human, right? But somebody's sitting behind that desk in terms of, the prosecutors. They said they do the same thing we do. Right. Except that's their job, and yeah, it's
and it's pretty amazing, man. I mean, it really is. And I haven't seen the video yet. I want to see the video of the CEO. CEO is on Kramer's show.
PR totally.
And I didn't hear it yet, but that's something I do want to see.
And so I mean, people in here in the den even talking about that. The New York Times, I guess, had a story today that the exec was with the 120 million, and Duffy. We were talking about that yesterday, and you can see how that's constantly like Duffy wasn't in there yesterday, but guess what? He heard about it today, right? You know, I mean, you can see how it's reverberating as stories come out and so forth.
Right.
And that is, I mean, that story that we talked about. We didn't quite get through all of it yesterday in the morning, but yeah, with the exec in the one who in charge of the community banking division, she announces her retirement in whatever it was, April, I think it was, and then the findings come down in June.
Right.
She's out the door right then. The CEO was endorsing her beforehand. She gets her 125 million. Some of those biggest profits came from the years that are in question. She was in charge of it. She gets bonuses because they do so well, and then the bank pays a fine. All's well, right? All's well in Wells Fargo.
The thing that's going to be amazing, and we'll wait this out and see what happens, is that will someone actually go to jail?
So that's awesome, and I totally agree, right? The first question, though, is that they have the clawback clauses, and that's what I was reading about yesterday. When and they're saying that they haven't even begun to talk about that. What is the point of having a clawback clause if this type of a systematic, ridiculous, it might be criminal, like you said, it probably is. We'll see what happens. If there's no clawbacks there, then where would an executive ever risk clawbacks? And then when you put this in context of 5,300 people fired, millions of accounts opened, and that's not what public companies are paying executives fractions of billions of dollars to do, because those
fractions of billions,
and that money comes from the investors. That comes from the company, which is and guess what? You can say nobody feels it because it's so small, but we know it's happening everywhere, and this is a perfect instance where those hundreds of millions of dollars should not be taken from those public companies for somebody in that position.
There's no doubt. Now, there was a story yesterday, and so check this out. I'll find it before this afternoon at least. That Bloomberg did a story, and they counted. Now, what happens for everything that's public at this point? They said that the most that could be clawed back, even right now, according to the law, is 17 million out of that.
Interesting, yeah.
Yeah. Now, but what they said there. This is what they also said, that is because of the fact that that's when the options were given, okay, but that didn't have to do with the stock that she had prior to that, so it runs the stock up too.
Sure, right.
It had to do with
maybe that's a different criminal thing. If you're behaving criminally with millions of shares of a company
that you already have.
That's what I'm saying. Where you're manipulating a stock basically for the personal interest of your own portfolio.
Right.
That's a whole other conversation that I bet those district attorneys are having maybe even this morning around some table, and it's highly possible for sure.
There's no doubt. Let's go to Tim in Denver, Colorado. Hey, Tim, what's going on?
How are you doing? Both Tom.
Hi, Tim.
Hey, it's Kim. It's Kim.
Yeah, Kim. Yeah, I recognize my voice.
I totally recognize your voice. I got your picture right here. I know exactly what you look like. It's a beautiful thing, brother.
When you coming back to Denver?
We're going to come back pretty soon, I think. I think it's time to get on the road again.
Sure.
Okay.
Yeah.
Yeah, I was going to tell you my experience with Wells Fargo. When I was helping my son to get a house about 3 years ago.
Okay.
We went through all the hoops and loops. I have a good FICO score, like 830.
Wow. Yeah.
They wanted me to show my bank statement from like 6 months. And when I wrote a check for it, they wanted me to put another statement as to, is that your own money or where do you get your money from? So by the time we got the loan through, right?
Yes.
I think we got like 3.75, and if not, you have to pay like a mortgage insurance, right?
Sure. PMI, yeah, exactly, yeah, right.
And here my son is 28 years old, you know.
Okay.
And he looked at me and says, "Man," he said, "this Wells Fargo look like Hell's Fargo, you know."
Hell's Fargo.
So
He
tough,
called it
okay.
Hell's Fargo. We left that place. We told the loan officer, says, "You know, the way you guys treat us, I think we look like, you know, we're like criminals." And my son actually told the loan officer, says, I don't think you guys should be called Wells Fargo. It should be called Hell's Fargo, you know.
Not a good experience.
And that's it. You know what's amazing about that? That's an experience with someone with an 820 score, which is
top of the top.
My son had like 810.
That's awesome.
Like
anything over
830.
700, man, you're rocking when you're going into those places for sure.
Right.
Now here's another thing, right? And the other son of mine is 33 years old.
Yes.
So last May he finished his doctorate degree.
Okay.
So he was driving an old Subaru vehicle, so he wanted to go get a car for him, right?
Yeah.
So we went to a Subaru dealership, and this guy looked at like new graduate, probably old student debts and things. I said, no, he's buying his own car because I know his financial score, you know.
Sure.
So he was kind of reluctant, but I said, do it, you know. So he came back smiling with a big smile. He says, I am surprised that your son has an 820 FICO score.
Yeah.
He said, I have 5 Subarus in the parking lot, right, out back. So I can sell you 2 of those today.
Yeah, they love seeing those scores when they're trying to figure out what can they make happen for sure.
Right.
Yeah,
that's awesome.
So what was amazing was this is what he told my oldest son, right? He's 33 years old, right? He says Subaru has this great financial incentive for you guys. If you get a 6-year loan, right?
Yeah.
We can give you 1.45. Subaru will carry this loan for you, right?
Yes.
And his payment is like 4 something.
That's amazing. 1.45.
5 year, right?
Yeah.
1.99.
Okay.
His payment's 5 something. 6 years, right?
Yeah.
It's 1.99, right?
Okay.
His car payment is like 428, right?
Yeah.
So my son looked at me and said, do I want to put down payment? He was ready to put down like 10,000 for a down payment.
Yeah.
The salesman told him, said, no, you don't have to, right? And then the salesman told him, if you didn't have good FICO score, we'll send him to a subprime auto loan. You will be paying 8 to 12% loan for the same thing. Yeah.
You used to have your affairs in order, man.
Totally.
Awesome.
Yeah.
Thanks, Kim.
Good to talk to you guys.
Have a great one. Have a safe one.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Welcome back, folks. Let's go to Al in Texas. Hey, Al, what's going on?
Yeehaw, guys. How y'all doing?
Morning, doing Al. Great. Yourself, man?
Hey, I'm doing great, man. Real good. A lot of good blessings.
Perfect.
Hey, I used to work for Wells Fargo. It's I don't care what they say that what they did or didn't do, but there was pressure when we were out there as personal bankers or any position, even though they said, "Oh no, we're not supposed to do that," but underneath it was always there. Luckily, I was able to get out and end up working for the county.
I see.
But yeah, it's and I have a family member that is in management, and we talked about this. A couple, for a good while, and she pretty much told me, just watch out and just do what you think is right, even though you don't make your numbers. Because we always had a quota. We had a quota, and it was vicious. We there was people in my office, in the branch, that you were just like, how in the heck are they doing this?
And what happens? What would happen if you didn't make your quota? Was there ramifications?
Yeah, you didn't get your bonuses, your quarterly bonuses.
I see.
Yeah.
Okay, it had to do with bonuses, not getting fired. It just had to do with a bonus structure. I got it. Okay, right.
Yeah. So
right.
But it's this was going to come down, and I talked to my my family member about it recently, and I said, "Hey, well, how are you doing?" And she said, "No, I'm good. It's on. She knows what's going on, but."
Well, with 5,200 people, it seemed that I don't know how many banks. I mean,
5,200 people didn't have that idea on their own, right?
Yeah.
Let's put it that way. That's for sure.
That's pretty intense.
We appreciate the feedback, man.
Yeah, but it all comes from the top. It really does.
Oh, yeah.
That's what I'm saying. There's no way that they all just decided on their own. That was a culture, I'm sure. That
was
in
a bank.
Yeah, that just doesn't.
We were all on Twitter together.
Yeah.
Hey, let's go.
Let's just go open accounts.
Yeah.
No, that's
which they're not going to get anything out of.
Right.
Can you guys talk about the GDXJ?
The GDXG. GDXJ. So.
Yeah. I'll let you guys go, man. I appreciate it.
Okay,
thanks for the call,
Have
Al.
a safe one.
All right.
This is the Judah Gold Miners bullish position. And yeah, this is, I just saying to Tommy, as I said at the beginning of the show, it's going to be interesting that, if you own it, just put a stop underneath there, because this is going to be a big day in this, meaning, is that going to hold, these swing lows here? That's how it's shaking out. You stay right there, folks. I'm Mr. Basil Chapman. It's coming up next. And then, of course, we're going to Thinkorswim headquarters. Gas hit 293.
Big movement.
How's that?
Volatility.
Pretty amazing.
Thanks man.
Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.